China's central bank said at a recent meeting that 2015 will see continued prudent monetary policies, with better coordination of tight and loose monetary measures. Analysts expect both traditional measures as well as new monetary easing tools to be used this year.
China's Consumer Price Index, the main gauge of inflation, grew 2% in 2014 from the previous year, well below the government's 3.5% target for the year, according to the National Bureau of Statistics. In addition, the Producer Price Index fell 1.9% year-on-year in 2014. This easing inflationary pressure has given the central bank more room to initiate measures to support growth. Based on what central bank authorities said at their recent meeting, analysts said traditional measures like adjustments for interest rates and the reserve requirement ratio remain on the table. The central bank lowered interest rates in November, fanning speculation regarding future moves.
Monetary policies have been prudent on the whole, but our economy is facing great pressure in terms of maintaining economic growth. We think economic growth will further decelerate to around 7% in 2015. Consumer inflation remains weak, which has added deflationary pressure. Therefore, I believe there will be more loosening of some policies. I think there will be at least one benchmark interest rate cut, as well as 3 cuts for the reserve requirement ratio.
Central bank authorities said multiple tools should be used in a flexible fashion in order to maintain liquidity in the banking system. Last year, China's central bank implemented new tools to tackle changing conditions, including medium-term lending facility and pledged supplementary lending. Analysts said the new tools are more flexible and targeted to ensure sufficient liquidity and facilitate structural adjustments.
We think that direct cuts in interest rates and the reserve requirement ratio are sort of a big fuss. Compared with these traditional measures, I think new and flexible monetary tools will be used more frequently in 2015.
Central bank authorities have also reiterated the establishment of a bank deposit insurance system that is intended to lower risks and improve banks' capacity to serve the real economy, according to analysts.